Okay, good. What are we? We're in the afternoon. Hope you guys are doing well. It is July 20th. We're going to do a quick macro measure. Wayne is taking a break. Technology still being a pain in the butt. So let's do our quick disclaimers here and we can get started here. Let's see. There we go. All right, we're gonna get right into our markets here in terms of kind of where things have been and what's going on. So we've had a pretty decent run last week with Bitcoin. Faded towards the end of the week, and I think that was because let me get rid of some of this other stuff. Sorry. There we go. So faded a little bit towards the end of the week. We closed kind of, on the lower end, right? The lower end of the range. And really was because I believe it's the Clarity Act did not pass. It's not the end of the world, right? We did pass the Genius Act. But hopefully we can get the Clarity Act to pass here very quickly and get all these things buttoned up in terms of the action. So Coinbase had a pretty good run, right, in terms of finishing strong. You look at something like a MicroStrategies, kind of had that same feel of sell-off there. You had a hood that had again looked a little bit better, felt good with what Coin was doing. So MicroStrategy is a little bit of an anomaly there. Mara pulled back a little bit. Riot pulled back a little bit. Oh, actually, I apologize. Riot did not pull back. They actually finished very strong compared to a Mara. Right, that was relatively weak. I didn't see that combo there where it diverged. ETH was strong. This Ethereum ETF, again, any of those ETHA, ETHE, which is the grayscale, both of them are pretty sizable. The ETHA clearly a little bit more volume and than the grayscale, so that still looks pretty good. You look at the futures on that finish strong, just like some of those other names. Your gold and silver still in the kind of camp that more people are talking about silver than they are gold. So gold's been kind of somewhat stagnant. Silver put together a little bit of a scamper towards the end of the week, but nothing like the prior week. They ran it up over 39 and they sold back into it. Again, every dollar up on this thing. I think we closed very similar to where the guy sold 380 some million dollars, or sorry, 480 some million dollars worth of gold in terms of the futures. And I think that was roughly a break even somewhere around that level. So, he's at a push. Maybe he's the one that started to buy it in here as it went down a little bit down below his level. So that will be something to keep an eye on. A couple of things to keep an eye on, which I've added to my screen here, platinum and palladium. And they both had pretty good runs here. And again, there's some news here about production and demand for this. So both of those have had great runs. I would definitely keep an eye on those if they're going to start to run kind of like silver. I don't know the short interest on that, but that's definitely got to be on the radar as they continue to move. Crude is down and kind of trying to get to that 150 down there, right? Shied away from the 200. We've been kind of leaning bearish. We had XOM in I think two different services. Look to be kind of rolling those if you're short those. It's very interesting that you're right here and breaking down. Crude's not really breaking down that much. The news story on that, I think, was the driving factor that they could be potentially taking over Hess. Again, going to be an expensive deal there. Qs are doing pretty well comparatively to the broader market. Let me get out of a lot of these fibs for you so you can actually see the screen. So you can see great run above all your moving averages. You made a higher high on Friday and still looks pretty good. You look down at your spiders, right? We'll go through these real quick. Spiders, maybe not as aggressive in terms of the movement, maybe not, moving as much as the tech has been. Your diamonds, not feeling the love, right? Not feeling that, making new highs. It's actually making lower highs at the moment with a reversal on Friday. And very ugly looking Wednesday, right? That was a wild card. You're like, what the heck is going on here? And they reversed that back up. IWM, same type of chart, maybe not as aggressive to the downside, but somewhat sideways. Did make a high here compared to this action, but could not retake the high back up there and could not keep it going with the reversal. So again, very ugly looking Wednesday. and trying to keep the mojo going. So I'd be watching for these divergences as you're up here. You start to see lower highs. Again, we'll have to see how we play this week. If we can get a rally or if we get any kind of a sideways movement, it's going to start to get very interesting. Yields are definitely have to be on the table here in terms of your action and what's going on. There's a lot of talk. We've had a couple thoughts on cutting rates, and Waller comes out and says, "Oh, we could potentially cut in July." From everything I am seeing, I mean, you can go over to the yourself and go over to the CME group, watch the Fed Watch tool there. Probabilities, I believe, are still that the first rate cut's going to come in September, but there have been a couple different people now that have come out and said, well, obviously the current administration wants it to drop 3 points, which is not realistic. But let's say we were to do even a quarter point in July, and the idea is that maybe then you could say, do we need a September? Right? And then we can make that gauge from there. But does this spark the market a little bit? So September is the first month, though, on that watch tool, the Fed watch tool, that is suggesting that we have a potential cut, and that's a 58% chance that we go down by 25 basis points. October is 48.8 that will have a 25 basis point, at least a 25 basis point cut. And you have a 29.9 that will be down 50 basis points by that point. In December, by the end of the year, your highest probability says you're sitting somewhere around the 375. You have an equal chance on either side of that, maybe an extra 25 or only at four and a quarter at 26.4%. So we're just kind of figuring that out. But I think for the most part, probability suggests we're not going to be doing anything with rates here. And we'll have to see how these auctions continue to go. VIX lingering at 16. We get down to the 15s, probably considered start to build a position as you are, again, going into the summer doldrums, July, August, right? We can get anywhere into the, 14s, 13s. You want to start to build a position. I would probably go October, November. September tends to be a little bit more volatile, and October definitely tends to be a little bit more volatile. Then they try to move it all back up for the end of the year. So again, that could be very, very interesting. In terms of our dollar, that has been sitting here. It did rally, and we've had a little bit of a give back. Not much here, but still sitting between the 98 and 99 level on that. Netflix had its earnings, and it got walloped. So that did not help the broader market there. So that was one that I was talking with Jeff and I'm sorry, Jeff Garbaz in our Rebel setup class, and there was a seasonality factor here that he did not like that came from his system. So we were watching that with a little bit of a bearish lean on that, and that's starting to come true. So that could be one where you want to be very cautious from July into August. That seems to be pretty bearish when you look at the entirety of that seasonality. Amazon is, or I should say, was doing okay. Wednesday was an ugly day, not really getting back up through the highs here. And I mean, look, it's a solid looking chart, still within trend. I'm not changing anything. I'd still be bullish on that. Apple needs to do a little work, right? Needs to kind of get through some highs. You're in a pretty tight consolidation on this one. So I think if you can get back up through one of these or pick one, maybe that's that high there, 212, 40 on that makes you feel a little bit better in terms of having some confidence that it's at least able to take out highs. We're going to start as we're going into earnings season. So these are all relevant on the radar for the next 2 weeks. Meta gave us a very ugly looking sell here, but recovered nicely on Friday. They got down to 691, brought it all the way back up to 704 on the close. So that's a good looking reversal. That may play into this week if they can get any mojo back up to the upside. Microsoft has been the beast, right? Just continues to grind higher. Trend is your friend on this one. Be watching that. You are going to have earnings on that one, 7:30. The other two that are coming out before that, I think it's going to be uh, Google is 723 this next week, and Tesla will be out at 723 as well. All the others going, I believe, the next week after that. So I think Microsoft 730, Meta is 730, and then I think Apple is like 731. Nope, yep, 731, and then Amazon I believe is a week after. I think they're like 87. So eight, nope, Amazon moved up. So now that's 731. So that has been looks like they moved it, made the adjustment. So that's going to be, make a little bit more of a change there. So moving down, Adobe didn't do much. Tesla had a good run on Friday. Gave a little bit back on Thursday, but a great run, breaking out through the highs, getting back above the 50-day, pretty solid in terms of the movement. I guess the only hiccup is what's going to happen with earnings, right? That's going to be on 7/23, so got to be aware of that. Our big chips, NVIDIA, AVGO, AMD, and Taiwan Semi, were all down, and that's really on the cusp of a pretty awesome week, right? They all gapped up on NVIDIA going into China. Nvidia did make a slightly higher high compared to the Thursday action, but gave some back. Your AVGO still looks like a beast, AVGO, and it still looks strong, right? Didn't make the higher high on Friday, but got sold into. AMD really gave a lot back between Thursday and Friday, but still up above that gap. So that's something I'd be watching. And Taiwan Semi with its own earnings gapped up on Thursday, and they basically just been selling into it since. So that's something to keep an eye on, come back down to fill this gap and then potentially taking out the gap below there if that continues to roll over in the bigger picture. So that being said, that is most of what I want to cover. A couple other things that I want to get into in terms of the bigger picture that I think you guys got to be aware of is actually, let's do it this way first, is the big weighted names. And as we are getting into these big weighted names, we've been somewhat stagnating here. And you can see the red candle really came from a Netflix that's in this kind of little mini index that I've created. Apple, Microsoft, both the Googles, Meta, Tesla, Netflix, Nvidia, and Amazon. So those are the big weighted names. And obviously, if I took out Netflix, maybe it looks a little bit better, but important to kind of just keep an eye on this because this is the leadership of the market right now, right? This is what is moving the market and it's going to continue to move the market up or down. So if they can't get these to kind of rally out of this zone, you can see we are slightly lower highs. If we can't get that, then this could start to be the top of of the market and give us a little pullback, especially going into earnings. So as earnings unfold, that's definitely something we're going to watch is how is this group reacting, right? How is the overall reaction here? Are we going to have Netflix types of reports where Netflix was decent, right? For the most part, when you look at the numbers, but they really just did not like something. I don't know what that was. I'm not going to worry about it. I'm trading the action. So, that was one where 713, it beat their number, but again, maybe guidance was weak or they didn't like something in the advertising, whatever it was. I'm not going to pretend to give you the fundamental reason why the market did not like it. So whatever it was, the stock was down. They weren't able to recover it. So we'll have to see how that plays out on Monday and then follow through. But in terms of those big weighted names, I think you definitely have to be watching what's going on here as they unfold. And they're giving us a little break in between, right? Allowing us to absorb that between 723 to 730 to 731 to allow a lot of those big names to be absorbed by the broader market and how we can then maybe even position ourselves as we are going forward from one to the next, from one kind of cycle to the next, 1 week to the next, right? So that will be very interesting as that starts to play out as we look at some of those individual names, right? They could, again, you can take something like um, a Microsoft and or let's say you take Google on 723 and you say, okay, what are their numbers? How do their numbers break down? Is that something that's going to play into Microsoft's or Amazon's, right? In terms of their cloud or any of their other advertising numbers, right? So you can start to pull apart some of this data to help you get a lean on some of the other ones, right? So that's very, very important. The other thing I want to kind of get into is the breadth of the market. So obviously we're talking about that those big weighted names and how they were moving, right? We had that little bit of a grind to the downside, whereas the market's just kind of grinding up here in the spiders. It's doing a little bit better in terms of your Qs, right? If you look at the market in general, if you look at your tech, right, a little bit higher, maybe a little bit better in terms of comparing apples to apples. But when you have that broader big tech that's been kind of lingering to the downside, you got to be a little bit concerned that maybe there is a little bit more of a divergence here that you want to be aware of. Then you want to look at, okay, well, how's the rest of the breadth of the market? So a couple ways to look at that. One that I like is I have the 50 days, which is the SPX A50R. This is the amount of stocks over above their 50-day. And you can see that we are slightly deteriorating here in terms of just the highs, right? Not really that bad. No, I didn't want to do that. Sorry. I clicked the wrong thing. So you can see we're slightly deteriorating here, right? Yeah, we had a pretty good move back up off the lows and it's coming back up a little bit, but we also made a slightly lower low versus this area. So again, the amount of stocks, you want to see this continue to climb, that everything continues to stay above. This is just the 50-day, that orange line right in there, right? So you don't want the broader market to be rolling back over and taking out the 50-day. That's the most reactive one compared to the 100 and the 200. So we want to watch and see, all right, we're getting a lot more stocks that are falling. What does that mean? Really, what is that giving us an idea of? Well, if you're looking at the 100-day, or that, I'm sorry, that 50-day, let me just kind of draw an orange line in there. So you can imagine all, again, the broader market here, right, in terms of this image, the 50-day has been kind of rallying, right? Most likely the 100-day is probably rallying on a lot of these as well. And then your 200. So if you look at them as the 50, the 200 and 100, or 50, the 100 and 200, right, in terms of how that would look, obviously stocks that are starting to drop back down below their 50 and deteriorating is one of the first signs that you look at for tops of the market, right? That's just one of the first signs for a clear deterioration of the underlying market. That breadth is not continuing to play out, that not all stocks are going up, right? So if you start to see some stocks start to go down, maybe that's one sector, maybe it's something individual that's playing out, earnings start to move. But when you look at the deterioration here, that's the first sign, right? That's the first sign of an indication. Now you go over to something like the 100-day. Okay, maybe we're not as bad. We are still a little bit weak compared to where we've been, while this market continues to try to grind, right? So you look, the highs, we had a big push here, and that's was kind of lined up with that candle. Yes, the stocks are slightly higher in terms of price at the moment, but the amount of stocks are not. It's not that big of a deal, right? It's not a massive divergence here. But again, it's just giving you a little bit of an indication that maybe that breadth is starting to give way a little bit. Same thing with your 200-day amount of stocks over your 200-day. Yes, we are improving for the most part, still above levels, still looks okay, not the worst, but not really, again, or we're not rallying up on a bunch of stocks that continue to climb higher, and we're only at 58%. And put this into perspective as well. So let's go out a little bit of time and let's say look at it in 5 years. So when the market was screaming back in 2021, right, all that money floating in the market, we were at a 90% of the stocks above their 200-day. We failed, went down miserably, got down to only about 10%. We rallied up, only got to about 75%, sold off, rallied, right? Our rally here was at like 80, 82, 83%. Sold off again, got down to about 15%, rallied back up. And we're only sitting here at the all-time highs. We're only sitting here at about, 58% right now. So we're not feeling like really, really good in terms of the amount of stocks like we were back here, or even back in here in the 70%, 75%, 80%, right? We're not there yet, right? We're not really, the entire broad market is not really keeping pace with these new highs. So there's a lot of people that are talking about the narrowing of the breadth. What does that mean? It means like the big names are really pushing what's going on here. I saw a very interesting stat in the amount of money that the big weighted names make compared to the other, I think it was the top five compared to the other 495 in the S&P 500, and it was just absolutely ridiculous, right? So it's clearly a big deal that you watch what's going on in those, because if you see those top five, like your Apple, your Amazon, your Nvidia, your Google, your Microsoft, right? Those big ones that are obviously the big market cap. You can look at that by just going over to your visualize and looking at your S&P 500, 1, 2, 3, 4, right? Even a Meta a little bit there, Amazon, right? These are guys that are just making so much money that if they start to pull back in any way, that's really going to hurt the market, right? That's definitely something that we're watching. Another thing you can look at is the RSP, which is just the equal weight. And if you start to see deterioration, we haven't taken out highs in the RSP yet. And that kind of tells you that maybe we don't have the same type of push in the broader market that we had back in here, right? So when everything was awesome back in December of 2024, right? We're not having that same type of push because we have not been able to take out those highs yet, right? So that is very, very important as we are watching things unfold here in terms of the market. So in terms of our sectors, we can go over here real quick, run through a couple of these. ETFs, right? Utilities have been a kind of a bellwether, really have not pulled back much. Made a new high on Friday. I think a lot of people are really liking the action there. Again, that is typically a defensive play, right? Typically, there's a lot of people that have talked and kind of converted utilities into the AI infrastructure build out for data centers and like, okay, maybe there's some names here I want to play for that. So again, that index has been relatively strong. So maybe it's not as defensive as it's been in the past. Your consumer staples is just stagnating. We're not really going anywhere. You can see us hovering around the 200, the 100, and the 50. So not really something that I'd be looking for. Healthcare, just going down the list here, was relatively weak this past week. I look for probably taking out lows here as a continuation that maybe we do retest bigger picture. Can this continue to fall apart? There was some negative news. I don't remember which stock it was this past week, but I think was it ELV that got hit hard? Yeah, ELV got hit hard, right? So again, is there a little bit of a fallout there? Again, I don't know what I think we can look at that though. The one reason I like using these names is I believe I can go to analyze and fundamentals and we can see. So like an ELV didn't play into any of these bigger names in there, but it probably just kind of moved the market down. I believe Abbott had a lousy week as well. Did that come back at all? No. So Abbott still was pretty ugly. So a couple names in there that definitely could be on your radar. Pharmaceuticals, maybe a little bit better, right? In terms of where we're at. We did have some positive names this week, but nothing that really jumps out at me that I want to be in. You look at the market here, maybe want to wait for it to get back above the 200. You feel, excuse me, feel a little bit better about that. Your energy, obviously, more like the utilities. And you would think this would be a little bit hotter because I think there's more names in here that individual energy names that are associated with some of those build outs. And you get into solar, you get into other things that are in here, but this has been in a good uptrend, right? But I don't like, so let's just draw this. So again, I like the trend here, but I don't like that we stalled and failed to make any higher highs, and it fell back down below the 200. It did bounce off the 100. So maybe we do get a little bit of an ascending triangle feel, and then we finally get the breakout here on some positive news. I don't know what that would be, but that would make it interesting. Your discretionary in terms of that, it's been relatively strong. It did break out from this area, came down and retested that area. I would like to see this continue to go. So that could be one on your radar. Again, in that space, Amazon, Tesla, Home Depot, McDonald's, TJ Maxx, Lowe's, Starbucks, Royal Caribbean, Nike, Dash, O'Reilly, CMG. So again, top name may not be exactly what you would have thought in terms of the consumer discretionary, right? So that could be one you keep on your radar. Home builders, I think interest rates have to move for this thing to really get out of its own way. So I'd be careful with that. With interest rates, financials kind of hitting a pause, right? Did have a great rally, had a phenomenal run off of this, but a lot of them came out with earnings at the beginning of last week. Had a little bit of pops in some, and some sold off. You also have the financial of your credit cards, right? So there was some mixed results there in terms of, or I should say, mixed kind of charts where they weren't feeling great, right? Pulling back a little bit, made the low on Wednesday again, and rallied up a little bit. So have to. Well, I wanted to be on Visa. I thought I clicked on that, but I guess it didn't. So Visa kind of just stayed down towards the low on that. So maybe that's an area you look for. Your semiconductors, we know what that chart's going to look like. That's been strong. And again, any weakness in there, that's going to be very difficult for the market to rally because that's what's been pushing it up. Mining and been on fire, right? Basically, what's going on in silver, as I mentioned, the palladium, the platinum, right? In terms of all of that stuff. So mining has been looking pretty interesting as you are looking for opportunities in those miners. XLK, this is basically a technology. And again, you imagine what's going on in the queues, what's going on with that. But again, I would keep an eye on the fundamentals. What is driving at the top of that? NVIDIA, Microsoft, both of them are actually strong. That's 30% of the market right there, right? So you add an Apple, been somewhat stagnant, but AVGO on top. Oracle had a breakout this week. So they got, no, let's see, I click on that and that's supposed to go. But Oracle had a great run on Thursday, gave a little back on Friday on that one. In terms of, let's see, the industrials, that is going to kind of feel a little bit, well, not as bad actually. I thought that'd be a little bit more like the Dow, but the ugly looking Wednesday, same as the Dow, but a much better rally in terms of coming out of that. Again, you go over your analyze, you can see the names in there. GE, I think, was moving. RTX, Caterpillar, what has been hot. Uber been decent. GEV has been hot as well. So again, you can look at a lot of those names and just see the movement. GEV kind of driving the bus there. Caterpillar, again, let me get off this long-term chart. I apologize. That looks pretty good. So again, the top names there are moving that ETF up pretty nicely on that one. I'm going to skip over the gold index. Your materials, again, somewhat stagnant, not really that crazy. Still within trend, still doing all right, still above the 200, but again, failing kind of not really in that same spot. And then your real estate has been flat, right? Not doing much there. And then your communications, another one that's been driven largely by only a couple of companies. Your Meta and Google, Netflix obviously down, not helping it, another Google. So Meta and Google really make up, what's that, 18 and another 18, so 36% of that. Add in a Netflix, you add another, so you're at what, 30, what did I say, 36 and 8, so you're, 44%. So right in there, those three companies make up a very large portion of that. And Meta has been relatively weak. Google's did okay, but Netflix being down, obviously, I can see why that would be ugly in terms of the action there. So that is your XLC on that one. And obviously, you can get into other different names in terms of ETFs or different ones, but I like going through this because they actually show you the components of those. So I think in the most part here, what are we watching for the week? We do have a relatively let me just pull up my calendar again. Let me go back over here and just kind of give you some of the stuff that's going to be should be on your radar. Obviously, earnings, right? We're getting into a busier earnings week in terms of that. Really not much. Let's see. We do have Powell talking on Tuesday, so that's something to keep an eye on. Wednesday, let's see. Wednesday, really not much in terms of that's Tuesday. Let me go down to Wednesday. We do have a bond auction. That'll be something to keep an eye on there. Your Do we have a bond auction on Tuesday? We do not. We do have the semi billings report. We have Powell talking on Tuesday. Wednesday, we have the 20-year bond auction at 1 o'clock. No one. We should be in blackout period, so there should not be anybody else speaking here until we get to that point. And then again, relatively quiet. 10-year tips on Thursday. Obviously, manufacturing PMI, that'll be at 9:45. Continuing claims and initial claims, 8:30. And then Friday, do we have anything major? Not really. A couple small reports. Kansas City Fed Services, June preliminary capital goods, preliminary durable goods. But for the most part, it's going to be a quiet week outside of earnings. So I think what we're going to be focusing on most is really the earnings. And then obviously tariffs, right? That's got to be a backdrop that we're paying attention to. And crypto, right? In terms of what can move this market. And if we can truly get some speculation coming back into Bitcoin, right? So those are a couple things on my radar. I hope you guys have a fantastic rest of your weekend. This video will go up in a couple of minutes, so hopefully we'll see you guys in class bright and early on Monday. Thanks. Take care.